Hey everybody, Crypto Stu, and today I wanted to do a video on another video on Flex Perpetuals, with an emphasis today on how you can use this platform to make money as an investor. So, Flex Perpetuals is a perpetuals exchange launching on the base chain. It hasn't yet launched, but once it does launch, that obviously caters specifically to traders, those who want to trade with leverage. However, there are a number of different opportunities that, even if you're not a trader, that you can use Flex Perpetuals to make a passive income or a passive investment. And I wanted to break that down in today's video because if you're not familiar with how these platforms work, then it can seem quite complex. And so I really wanted just to get into to try and really simplify things. What are the key areas, the key stages that you can invest, i.e., and get in early into the protocol, and then where can you earn yield, and what do those different yield opportunities look like? So that's the topic for today's video. If you haven't already, make sure to hit like and subscribe for the channel. I really do appreciate that. It helps bring more eyes to my own channel and also to the projects that I am supporting. And on that basis, I think it's important to remember that I am on the Flex Perpetuals team. And so this is not financial advice. Any of the figures and potential that we talk about in this video, there are no guarantees. It's meant for illustration purposes only, and to educate you on how the platform works. And because this is a real project, this project has real utility, it's a real business, and it generates real revenue. And so the yields that we will be paying as a project very much depend on the revenue that the project makes. So I'm not here promising a certain APR or a certain return on investment. You are getting in early to an exciting project on the base chain. There's huge opportunity there, but there are absolutely no guarantees. So just wanted to get that out the way to begin with. So I get lots of DMs on a daily basis from people who maybe just haven't fully understood what exactly the opportunities are inside Flex Perpetuals. Because if you're not familiar with these protocols, they can seem quite complex. There's a number of different areas to them, and a number of different terms that are involved with each of the different areas. So I wanted to try and simplify that and break it down as easily as I possibly could, or as simply as I possibly could. So just as a reminder, what Flex Perpetuals is, we are bringing leverage trading to the base chain. So it's a perpetual exchange. So it's decentralized. You retain 100% self-custody of your assets when you're trading on the platform. And there's no KYC, unlike, centralized exchanges. You can trade with up to 100x leverage on crypto. And then there's different leverages available for foreign exchange and commodities. And we share 90% of the revenue that this platform makes is used to help the community through paying yield to our investors and, supporting our native token so that everyone gets a good return from their investment. So this is a real utility project in DeFi, and perps or perpetuals are an important part of the DeFi infrastructure. And I was just listening to an interview the other day on the Wolves of Wall Street podcast, and I can't remember the name of the person who was being interviewed, but they were very clear that perps is one of the most exciting areas in decentralized finance and has the potential to really draw in huge amounts of adoption, particularly for those people who are looking for an opportunity to trade with leverage, without the restrictions of KYC, etc. So we're really excited about what is being built here. But let's dig into exactly where the opportunities are. So first off, it's the early opportunities. So how you can get involved in Flex Perpetuals as an early investor, because we haven't launched yet. And so you're still early at this stage. Initially, we had the seed round. So the seed round is done. We raised $700,000. That was a community raise. There was no venture capital involved there at all. And if you got in at the seed round, congratulations, because you got in at the very best possible price. Some of the terms that are involved with that seed round investment, so they are locked for 6 months, and then they will be, your FDX tokens will be released to you over a period of 18 months thereafter. But during that period of time, they will automatically be staked in one of the yield opportunities that I'm going to talk about next, earning you passive income. So I don't want to talk too much more about the seed round because it's done and dusted. Let's focus now on the TGE, or the token generation event, which is essentially a public raise. And this opportunity is open right now. So you can get involved in the TGE. I'll leave the link in the description below. But this is going to give you the opportunity to get in at the very next possible best price in comparison to the seed round. So one of the key benefits of the public raise stage is that there's no lockups, there is no vesting. Your tokens are 100% liquid on the day of launch. And so you can choose what you want to do with those tokens. You can hold them for price appreciation, you can sell them, or what might be where the focus of this video is today, you can pair those tokens with ETH, and you can provide liquidity in a couple of different places. So the seed round gets you FDX tokens, the TGE gets you FDX tokens, and then finally we have the FLP surge. So in our platform, we have a liquidity pool called the FLP, and this is what's called a market making liquidity pool. So essentially, you as a provider, a participant in the FLP, you're providing the liquidity that the leveraged traders need to be able to trade with leverage. So you're the FLP is the counterparty to the leveraged traders. And so it works a bit differently to the other yield opportunities. But in order to bootstrap that liquidity at launch, we're doing what we call the FLP surge, where you can deposit USDC. You will get the FLP token, which is an index fund made up of USDC, BTC, and ETH. And as a thank you for providing that liquidity at the outset, you will receive a bonus of FDX tokens that you can then use in various different areas inside of the platform. So the seed round and the TGE are just purely for an allocation of FDX. And then the FLP surge, you'll get your FLP liquidity plus a bonus of FDX tokens. And the launch date for that FLP surge is to be announced. But this will be one of those opportunities where you have to act quickly. The quicker you act, the better terms you will receive. So those are the 3 stages that you can get involved in Flex Perpetuals prior to launch. So you're getting in at the ground level with these 3 different opportunities. And then once the platform itself launches, you will have a few different opportunities to earn a passive income. So there's the ST FDX LP, which essentially is pairing your FDX tokens with ETH and staking them on our platform. And when you stake them, it will be turned into ST FDX LP. So if you get involved in the TGE, for example, and you're given your FDX tokens, what you'll do at that stage is you'll pair those tokens with ETH, and then you can stake them on the platform. And when you do that, you will receive 30%, or the ST FDX LP pool receives 30% of the revenue that Flex Perpetuals makes. And so the revenue comes from the fees that the traders have to pay when they open, close, and borrow on the platform, along with liquidation fees as well. So the STFDXLP gets 30% of that revenue. And it also, another boost is that you will get 35% of our escrowed version of FDX, which is part of our tokenomics. So essentially, let me just double check here the exact amount, but 44% of the whole token supply is over a period of 4 years will be used through emissions in these incentives, and 35% of the community incentive emissions go towards this STFDXLP pool. So you're getting revenue share plus you're getting these incentive rewards. So this is the pool. Those that are in the seed round, you will automatically be in this pool. The seed round investors don't get the incentive rewards, they just get the revenue share. If you're in the TGE, so if you get in early in the TGE and you pair your value with ETH, then you can stake in this pool and you would get the full 30% revenue plus the 35% of the incentivized rewards. And just to be clear, that doesn't mean 65% APR, okay? It's 30% of the revenue, which is divided then amongst the TVL, the total value locked inside this LP. And so that APR will depend on what the revenue is, but it's getting 30% of the overall revenue. Just wanted to be clear on that. The other option that you've got is to stake your FDX ETH LP on Aerodrome. So Aerodrome is one of the largest, in fact, it is the largest decentralized exchange on the base chain. And Flex Perpetuals owns a significant stake in the VE Aero token, which is essentially a locked version of the Aero token, which gives us the ability to incentivize our own liquidity pool on that platform. So you don't get any revenue share by staking on Aerodrome, but you will get highly incentivized rewards because of our protocol own holding of VE Aero. And so this provides a really interesting dynamic that we haven't seen with a perpetuals exchange before, where you can be looking at where is the APR the highest? Is it natively on the platform as STFDXLP, or is it on Aerodrome? I.e., where do I want to be providing liquidity? And because we're kind of dividing the TVL between these two different pools, it helps us maintain higher APRs, which ultimately mean you get a quicker return on your investment as an investor. So in either of these, the FDX LP or the FDX ETH LP, you will need to pair your FDX with an equal value of ETH. If that's not possible, you can use the ZAP function on the DApp, which will essentially sell off half of your FDX in order to pair it up with Ethereum. The other area is the FLP. So the FLP, as I've already mentioned, is the market-making liquidity pool. This is going to have a very different kind of dynamic to the two that we've already talked about. The FLP acts as the counterparty to our leveraged traders. And the FLP itself, so you'll deposit USDC and you'll receive the FLP token in return, and then you can stake that on the platform for revenue share. Now, what the FLP actually consists of is it's like an index fund. So it's a combination of USDC, of Bitcoin, and of Ethereum. So by holding the FLP and staking the FLP token, you will benefit from the price appreciation. Well, let's hope the price appreciation of Bitcoin and Ethereum, because just about 50% of the value of FLP is derived from those assets that make it up. On top of that, you have to take into account the profit and loss of the traders on our platform. So if traders are winning, the FLP essentially is losing value. And if traders are losing, then the FLP is gaining value. So there is that counterparty risk that's involved with the FLP that you don't have with the other two areas that we've talked about. But the FLP doesn't have any impermanent loss, okay, because you're in this index fund rather than a liquidity pool, and you will get 45% of the platform revenue plus some of those ESFDX rewards as well. So really, there's those are the three main yield opportunities for you inside of Flex Perpetuals. You can stake your FDX ETH natively on the platform to earn revenue share and incentive rewards, or you can stake that FDX ETH LP on Aerodrome for incentivized Aero rewards, or you can, completely separately with nothing to do with FDX, you can deposit USDC into the FLP, where essentially you're holding USDC, Bitcoin, and Ethereum, and you've got exposure to the profit and loss of traders on the platform. So the first two, impermanent loss, is something that you have to take into account because it's a standard V2 style pool where there will always be 50-50 of each asset in that pool. And then the third, there's no impermanent loss, but there is the added counterparty element that you have to take into consideration. So those are the three. Let's have a look at what potentially that could look like. Now, I'm going to focus on the STFDX LP based on if you were involved in the token generation event. If you get involved in the token generation event, here are some not predictions, but examples of what things would look like depending on various different prices that we may see in the future. And the key for this is this concept of yield on cost. So you want to be earning as much as you possibly can on the value that you invest at the outset. So let's imagine someone comes in and deposits $10,000 into our TGE. Now, it's likely that that $10,000 will result in around about 2,000 FDX tokens. The exact figure we won't know until the raise is complete, but that's our best estimate at the moment, is that $10,000 will be 2,000 FDX, so roughly $5 per FDX token. And then if you want to pair that with ETH, let's assume ETH is at 2,500, and therefore you need $10,000 worth of ETH to pair with your $10,000 worth of FDX. So your total investment here is 20,000. The figures here do take into account impermanent loss. Okay, so that is something that you have to be aware of inside of that FDX ETH LP, is that impermanent loss will play a factor. But as you can see here, it's rather insignificant in terms of the potential returns. So what we've got is $5 FDX price, which is roughly what we're expecting it to launch at. And then we've got various different increments, a 2x, if FDX does a 2x, a 5x, a 10x, a 20x, okay? And then the ETH price as well, I've just gradually made that increase in line with the FDX price as well. And then we're just using this standard 50% APR. Now, I think that is something that's going to be highly achievable, particularly within the first year or two, being able to provide returns like that, if not significantly higher, particularly when we've got, we're dividing the TVL across two separate LPs, the SD FDX LP and the FDX ETH LP on Aerodrome. And obviously the TVL is important because the the more TVL in a pool, the more dilution of those rewards there is. So by dividing that TVL, we can potentially keep those APRs elevated for longer, which is a key part of our tokenomics and design. So bearing all of that in mind, this annual yield here is what you could expect if these three columns are true. So if FDX is $5, ETH is 2,500, and the APR is 50%, you'd be looking at an annual yield of $10,000. Okay, that's essentially at launch price. Now, if it does a 5x and FDX is $25 per token, and then let's say ETH's at $3,500 at that time, and we've got 50% here APR, then your LP will be worth 53,000. Remember, you invested 20,000 at the beginning, 10,000 in the FDX and in the TGE, plus $10,000 worth of ETH, plus an annual yield of 27,500. So your yield in 1 year is more than your initial investment. So you're getting a full return on your investment through the yield alone. That's before even thinking about the fact that you can withdraw this LP at any time and take the value of that. And then, if we're getting more ambitious with our targets here, and just to put it in perspective, HMX, which is the platform that we have partnered with, and we're bringing their technology onto the base chain, they did a 20x. So there's no reason why we can't do that. And with our tokenomics, we feel we're in a much better position to be able to maintain the price increases that we see. We may not see price go up as quickly or as fast as others have done in the past, but we will be able to maintain that stability. That's the goal for us, is a long-term stable price. Trending in the right direction, obviously. So let's say it is a 20x that we managed to get in the token, and let's say ETH price is $10,000 at that time, and you're getting that 50% APR. That's going to mean that your initial $20,000 that you've invested here turns into just under 180,000, and you'll be earning an annual yield of $90,000. So there is huge potential for returns within these various different opportunities inside of Flex Perpetuals. This highlights just that one of those opportunities for a public sale or a TGE investor. But each different opportunity comes with its own unique benefits and risks. And so I hope that this video has helped shed a little bit of light as to what those opportunities are, and maybe gives you an opportunity to think about how you want to get involved in this platform if you do. So hope that was helpful. Any questions, as always, you can find me in Telegram. Just make sure to tag me so that I see it. And yeah, remember and pop a comment in below if you've got questions. And thank you for watching, and we'll speak to you all soon. Cheers.